I'm Matt Bouchard with REIT.com here in Chicago for the Real Estate Research Conference as well as REITWeek 2013. Joining me is Susan Wachter, professor with the University of Pennsylvania's Wharton School. Thank you so much for joining.
Pleasure.
Now, you've studied the inflation sensitivity of REITs extensively. Now, can you give us an idea of what your major conclusions are about REITs relative to other inflation-sensitive asset classes?
Well, of course, real estate is regarded consistently as a good inflation hedge, and it is. But the question is, how good are REITs? Because REITs, of course, are the transparent way of investing in real estate. So we studied it absolutely and relative to other hedges such as gold, and it's the best out there. Perhaps not surprisingly, in good times and in bad times, REITs do hedge inflation. What we find, we looked further as to whether REITs that have more debt than others, so is it from the fact that the REITs are financed with long-term financing? No, it's not that. That's a component with long-term financing, slightly better inflation hedging capacities, but actually across the board, the data period that we looked at, which was 1990 to the current data point, it is a hedge that is an outperformer, both because it hedges inflation and because it hedges inflation and yields a return that is more than the other hedgers, such as gold, which obviously has actually not yielded a good return.
And what sort of implications do your findings have for investors and investment portfolio managers?
Well, so real estate has also been found in the research literature as moving with the S&P 500. But the point is, it isn't just S&P 500. It is additionally an inflation hedge, far better than the S&P 500. So although it's in the short run correlated with the S&P 500, looking at longer run trends, it's a far better hedge. And secondly, substantively, if you look at the differential in the movements, you can see the long-term factors that are causing real estate, as reflected in REIT returns, to have a different investment performance than S&P 500, which of course is a good thing, because if you want to invest in the S&P 500, there are ways of doing it. But if you want to diversify and not just be in the S&P 500, then you want to do it transparently. Well, REITs deliver. They deliver both from the diversifying, that's other research that I've done, but absolutely in terms of this inflation hedging capacity. And that's part of the reason they are a diversifier.
And what are some of the other areas of REIT-related research that you think are particularly worth exploring?
Well, this inflation hedging capacity, it appears, is global as well as US-specific REITs, the NAREIT index. And it would be interesting, and that's current research that I'm doing, but I'm also curious, I think it's an interesting question, to what extent the REIT explosion, there has been a REIT explosion across many countries which are implementing legislation to adopt REITs, whether REITs are serving as hedges against the local currency. Our work suggests is that international REITs are actually hedges against the dollar, but whether they are in addition local currency, that's one question. A second question, which is in some ways a deeper question, goes in another direction, is rents in the US across many different asset classes, real estate asset classes, have not increased over time. However, going forward, we may be in a different world. We may be in a world where we have more supply restrictions for real estate and for other commodities.
Thank you so much for joining us.
My pleasure.
For more on this and other REIT-related news and information, be sure to visit REIT.com.